Thought I would get a little bit of information out here to first-time home buyers. I get questions all the time about first-time home buying programs, and I think a lot of people get confused. So I wanted to get into some really great affordable programs to buy your first home, and I will share those with you in just a moment. I'm going to primarily focus in the state of Missouri with the MHDC program. They've got several that work with other programs to allow you to get into a house with very little money out of pocket. If you can get a seller to help with some of the closing costs and things like that, you can literally get in a house with a very low payment and no money out of pocket. So, what are the programs? Every state has unique programs. Like I said, I'm going to focus primarily on the state of Missouri in the Camden County, Morgan County, Miller County, Laclede County area. And this is with MHDC. MHDC is the Missouri Housing Development Commission. They have down payment assistance programs. To qualify, you must not have owned a home in the last 3 years to be considered a first-time home buyer. There are income restrictions for household income. There's specific credit score requirements. They're a little bit more conservative on debt to income requirements. In other words, the amount of overall debt, including your new house payment, can't exceed more than a certain amount. And I'll go through those details here in a moment. The specific debt to income requirements, and then there can be specific reserve requirements. If you end up with a manual approval where an underwriter has to manually approve your program, there are requirements for you to have a little bit of money left in the bank after closing to make sure that you're not going to not be able to make a house payment if something were to happen. The MHDC programs that I'm going to look at here in the presentation in just a moment is going to be the conventional with a 3% down at a reduced rate, or reduced rate and a 4% down payment assistance program. In the Lake area, it's 100% VA and USDA eligible area. So I'm going to go through those programs that allow you to couple a very low rate along with the MHDC program to make it a lot more affordable for you. What are the basic guidelines on government with the USDA, VA, and FHA? The maximum debt to income for your house payment and all of your other debts typically need to be around 41%. Occasionally, it will allow you to go a little bit higher, but you need to make sure that you can definitely afford this house and some of your other bills. The minimum credit score on all of the programs is 640. If you are manually underwritten, then they do require that you have a few months reserves in the bank after closing. In other words, if your house payment is $1,000 a month, you need to have a couple $1,000s left in the bank after closing. Conventional loans, the maximum debt to income is typically not allowed to go above 45%. It can on occasion if you do get an automated approval. The minimum credit score on conventional is also 640. Double wide manufactured homes that are permanently affixed to a foundation are also eligible. There are additional restrictions with debt to income, credit score, and things like that. So you'll have to make sure that that property qualifies for your specific approval. What are the income restrictions? Well, in Camden, Miller, Morgan, and Laclede counties, for households, working people in the household, 1 to 2 persons, the income limit is $85,600. For households of 3+ persons, so that's a married couple with a child or two kids, the income limit is $98,440. So what do you need to do next? You need to get yourself pre-qualified, just like any loan. You need to gather up your last 2 years income information. You need to gather up your asset information for reserves, cash to close requirements. Get with a mortgage professional that understands this program and get your approval done. I'd like to go through a few other details on the actual program and show you some examples of what this program can mean to you on a purchase. So I put together this payment breakdown and total cost analysis showing you the USDA with MHDC, the VA with MHDC, and a conventional with a down payment assistance. The reason I wanted to lay out these programs side by side with a rent comparison analysis is to show you that the payment on the house itself is actually higher than what you're currently paying in rent. But if you look at the overall net worth after a 15-year period of time, it's significantly different if you're a renter versus buying. With MHDC, the zero down payment with MHDC, after 15 years, your net worth would be $562,000, and your net worth paying rent would have been zero, even though you're paying $400 a month or so higher for the house payment itself. On the USDA, all the programs, I went with a $399 purchase price. Of course, your payment would be less if you pay less for a home, but I wanted to use a prime example of our housing in the area. So a $300,000 house with taxes and insurance, a total payment on the USDA MHDC program would be $2,000.97. That includes your taxes and your insurance that's estimated for that home. The VA MHDC, the payment is slightly less because you don't have any mortgage insurance or guarantee fees involved in your payment. And then the conventional with down payment assistance is $2136.86. The down payment assistance is a bond, 4% forgivable soft second. Once you've been in that house for 10 years, you don't have to pay any money back on that bond. There's no payments on that bond while you have that bond. It's a 0% interest loan with no payments for 120 months. After 60 months, that bond will go down in value. So after 6 years, if you sell the house, you won't have to pay back 100% of the down payment assistance that you were given. The one key factor that you need to look at is, number one, your monthly payment. Is that going to be affordable to you? Instead of worried about paying $619 or more a month in rent that gives you no equity whatsoever, you'll actually, pay $189.04 in savings based on that without the down payment assistance program. The actual rate for the MHDC currently today at on February 8th, 2024, the current rate for USDA with MHDC is 5.375, which is significantly below the current market value of a USDA guaranteed loan. Same thing with USDA, 5.375. And the conventional with the down payment assistance program is actually they gave you a blended rate of 5.881, which I'm not sure how that came about, but the actual rate for the mortgage itself is 6.125. The amount of money due at closing, the cash to close, if you don't have any help from the seller on your down payment, your closing cost, the amount of out of pocket would be USDA on MHDC would be $8,100. On the VA MHDC, it would be actually about the same, the $8,100. And then on conventional with down payment assistance, it would be $5,016. So you could get the seller to pay $5,000 in closing cost, and on the conventional program, actually get in there without any money out of pocket. So once again, I wanted to go back to the slide that said, what do you do next? The first thing you need to do is you need to make a call and get yourself completely pre-qualified so that you understand that you do make what you make. You are qualified for the MHDC program. Your credit qualifies, your income qualifies, and your assets. Once you have that qualification, you're free to go find a property. It's best to go ahead and get partnered up with a real estate professional that understands this program as well. And if you need recommendations, I'd be more than happy to help you out with that recommendation. There are a few things to do on the property side that we need to make sure that the real estate agent and the your agent understands and can convey that to the seller's agent to hopefully get your offer accepted. So once again, it's Ron Yarbrough with Prime Lending. I'd love to help you out. And if you have any more questions, feel free to give me a shout. Thanks. Bye.